Thank you. I was told that, we were here to do some dancing and we were trying to get the room up a little bit. I won't subject you to that, and I'll talk instead about technology as a business. Today, the last couple of days, you've had really great conversations around fintechs and the changes in the environment and what's different as the world evolves into its next space and use of technology. At NatWest, we're passionate about innovation, but we come from a very different heritage to some of the people who you'll have heard talk about technology today. And so what I wanted to talk about is how we think about technology as a business, as a key part of our organisation. So for those of you that don't know NatWest, we are a bank. We operate in 8 countries. We've got 19 million customers. And we're headquartered in Edinburgh, London, Manchester, Bristol, and we also have our tech hubs in the UK, but also in India. We work with our teams out there. We are the second largest mortgage lender in the UK. We process 40% of the payment flows that go through in the UK. So we have volume and scale, and we work very closely with our customers and with our partners to make experiences for our customers that make a difference. We cover retail, commercial, private banking, institutional, markets, and we use 7 different brands. And unlike some of the new fintechs, one of our earliest brands starts from the 1600s, so we have a large amount of legacy that creates us as an organisation. If I talk about technology, 2,500 applications, 45,000 distributed servers, of which we've got basically 80 to 85% utilisation. 88% of our customers' needs are met digitally, so those 19 million customers we have, 88% of them interact with us through digital. And so you see why fintech and thinking about innovation and the world that we're a part of is essentially important to us, but we have to do it from, in many cases, a very different space than some of the other people that we deal with. Within Digital X, just to give you a scale, we've got 35,000 people. So, we in ourselves are large. And I was talking earlier about the ability to influence 100 people is fabulous. Once you get to 35,000 people, you have to have the structures and governance of a business. And that creates a different environment for our people. The other thing is that we're a highly regulated industry. And there's a large player in that, 40% of the payments. Regulation, control are always a factor when we think about the way we run technology. So if I'm to think about the job I have of running technology in a large bank, and I've only just taken the strategy, architecture and transformation role. Prior to that, I did the COO role for Digital X. Some of the things that we face is the need to face into ever-shortening technology life cycles. The rate of change is getting quicker. We need more capability. For those we compete against, we need to be able to anticipate or react faster. We need to be able to change faster. And when you look at the fact that we're large, we've got services for a huge number of people, that becomes far more difficult and becomes one of these levers that we need to think about how we drive and how we pull within NatWest Digital X. The other thing is that many fintechs start with technology being the business. We started from the days when it was the branch, it was the ledger, it was pen and paper. I said earlier on the panel, I personally remember the day when you didn't have technology at the core of your business, when you didn't have PCs on your desks, when you didn't have emails. So we've grown over a period where technology is not quite it's the core of our business today, but it wasn't the core of our business when we started. And as a result, we have a very different dynamic between the way we use technology and the way fintechs might use technology. And in many cases with our technology, because of the fact we do so many things beyond run one product through fintech or run one stream or niche, we're very cost-led, not necessarily value-driven. When we think about technology, not when we think about customers, we've got we've got franchises, we've got a huge purpose around customers and a huge focus on customers. But when we think about technology, we can often end up cost-led in the way that we're thinking about it. So when you start thinking about these sorts of things, the best way to talk about a business is actually think about the external factors that make a difference to you. So we all live in an economic time which is, for many, very different to what it's been for the last 20 years within the UK particularly. You know, we've lived in a lower for longer post the GFC crisis where interest rates have stayed low. We're now in a period where we're seeing higher interest rates, higher mobility, higher focus from customers on what they're after and what they want. So the economic environment we're a part of is very important to us. That also drives increases in cost. Wages growth, inflation, contract cost, supply cost, transaction cost, all of those things are things that we have to look at and manage as we think about technology as a business. The regulatory environment means that we have a level of control that we want to give to our customers, because the regulatory environment's here to protect our customers. It's here to ensure that we're doing the right things for them, but it also is there to make sure we know we're doing the right things and we can evidence we're doing the right things. And that in some ways makes us a little slower as a business than somebody who's not quite subject to some of those regulations. We know that we see competition left, right and centre from digital banks, from fintechs, from niche players, and it's not just competition, we see partnership, we see opportunity. And part of the thing that we're focused on, particularly in my new role, is how do we quickly enable ourselves to work with or embed the services from others rather than having to create them ourselves. Sustainability is key. You know, we know that the consumption of energy, you know, the amount of compute we use, the way we do code, the way we use paper, all of those things are something that we think about. And then it's balancing the ask between all of them. And so when we think about, you know, where do we spend our money, how much freedom do we give our developers, how do we give our engineers the right capabilities, how do we create the right outcomes for our customers, it's a balance between all of those, which is quite complex, which is why I talk about technology as a business. And so internally, we get lots of business demand. We can always spend more money than we're given to spend in technology without fail. You know, we end up 2 or 3 times oversubscribed every time we look for investment, not just in new things, but in keeping ourselves safe and secure. We know that the demand from our customers is there for us to do things differently. And we know that those things change the way that we as a technology organisation need to work. The supply and service management, we can't do it all ourselves. You know, so the days of us getting 100 people in a room to just go and build something, unfortunately aren't there because of the nature of the way that we work. So we spend a lot of time talking about contracts and who and what are the right ways for us to leverage third parties and to create partnerships and to create relationships. Operational resilience and security, I'm not sure that anyone 25 years ago, 30 years ago imagined the level of focus on security. And for us, we talk about protect, because it's not just about security, it's how we build in the protection for our customers and for our colleagues from people who might not want to do the right things or might be leveraging capabilities to ask them to do the wrong things. So financial crime, fraud, security, they all come to for me in the same banner around thinking about stability, security, and how do we make sure that we're there ahead of the things that we're seeing in market. We're a business, budget, investment, there's only so much of it. You know, I can only spend so much on remediating end-of-life applications. I can only spend so much on creating fabulous new mobile applications. And so that choice point is something we consider very heavily at a very senior level around how we're choosing what we do. And that direction point, when you end up with 35,000 people, is really important. Because if you don't have direction for where you're going and you just spend, you end up building the wrong things or building things that don't connect or building things that don't give you the speed or agility that you're looking for going forward. And the final one, which is probably the most important, is talent. And it's the supply and demand of talent. So how do we get the right engineering talent? How do we lift up the diversity in our engineering population? How do we make sure our engineers aren't spending their time doing things other than engineering because of all of those other things I spoke about governance and budgets and things like that? And so all of these things come into play as we think about how we're running technology the most effectively as a business. I spoke about the innovation cycles, and for us, innovation is key. We've set ourselves a purpose to champion potential, helping people, businesses, and families to thrive. Part of that comes to being a learning organisation. And learning organisations need to be able to react and to behave in an agile manner. And so one of the things we're really cognizant of is that the cycle of change has fast outpaced the ability for us as an organisation to react, which means we need to change. We then need to think about how we're bringing our cycles of improvement, our cycles of development, our cycles of change, our cycles of control, down to a level that we can support the rate of innovation that we're seeing. And this is only going to get faster, and it's only going to get faster on more fronts. Some companies are lucky. They only have to look at one front because they do one thing. Because of our fabulous heritage, we have to look on all fronts. And so when we think about innovation, we're thinking about, and what's going to be different, we're thinking about what is happening in generative AI. How do we leverage that? How do we use that to drive better customer experiences and colleague experiences for ourselves? What are we going to do on the edge? How do we think about the way the networks come together? DLT, what do we do in that space? What about the right to be forgotten? What about the regulatory overlays over the technologies? What happens if someone brings together something fundamentally different? I could go through them all because they're topics you've talked about with FinTech and the things that you're looking at. But one of the things when we think about technology as a business is we have to think about how we pay attention to all of these trends, but actually know when to focus when the trend's moving. And if I go back to this slide, you'll notice that they're sort of upside down U's, because the trend comes up really fast, and then it's like your Gartner hype curve. You get to your practicality of then when you go forward. And in some areas we're not going to be an early adopter, but we just have to know and have to be keeping our fingers on the pulse as to when we can actually make a difference and when we can actually leverage it for the work that we're doing. Climate. One of the big things that's causing us interest, not only around the cost of consumption, but the greenhouse impact of climate. This is a quote, the AI industry could consume as much energy as a country the size of the Netherlands by 2027. One of the things that we're very aware of is that compute has grown dramatically. From the days when you were limited by the machines you had, you're now no longer limited. You can have as much compute as you effectively can pay for. But there's a consequence to that around sustainability. There's a consequence around cost. And so actually, when we think about technology as a business, we don't just think about the things we're doing, we think about the P times Q. What's the obligation around consumption? And then what's the ongoing impact to the sustainability and to the market that we have, that we're existing within? So what do you do about all this? It's a big, complex world, and you could sit there and go, it's just all too hard, it's big, complex, we're going to outsource, we'll get someone else to do it. That's not what we're about. So if I think about Digital X, we have a vision to be a relationship bank for a digital world. We talk about NatWest Digital X being the power that enables the bank to do that. And we talk about the verbs that we do, because we're about action with our teams. And so we engineer and we protect and we operate. And they're things that everyone can relate to, whether you're someone who codes, whether you're a security analyst, whether you're someone who looks after operational resilience in the change process. It is about the engineer, the protect, and the operate. And it is about thinking forward about how we create the future that we're looking for. So we make sure, as any large organisation does, that we have direction and we have a framework for our people to work within. Because the way to get people to go fast is to give them velocity. So it's to give them freedom within a direction and the capability to make their own decisions. Every time someone has to go and ask someone else for a decision, you're actually in the wrong space. So what we try and do is make sure we have that framework that allows them to do what they need to do. So we talk about one bank. One bank's about reuse. It's about alignment with the strategy, and it's about how we think about together what we're going to create. Some things are very similar. You know, a current account's a current account's a current account. You know, I don't need a different current account for different segments, and I don't have one, by the way, but it's a really easy example. We do payments. Payments is a set of rails that everyone should use. We don't need to do different sets of payment rails. We need to use the payment rails we've got. And so we talk about how we can leverage common capability, onboarding, fraud, fin crime. All of those are capabilities where if we do them once for the bank, we actually end up with a really virtuous circle because we can learn from the different segments. We can see what's happening in businesses that might come across into personal. We can see what's happening in personal that might come across into wealth and institutional. So all of those things are really important to us. But it is about having a strategy and the framework that helps our people set direction and being very clear on that. And in architecture, it's about knowing how we connect the pieces as much as it is the pieces that are within them. So then you've got speed. And so speed is really important. So how we give our people the frameworks to make decisions. We, where possible, try and persistently fund the work they do, and where we can't, we try and give them as much certainty around the investment they're going to have, the resources they're going to have. And then we try and make sure that they're spending as much time heading in the direction that the strategies ask them to versus asking others for approvals. We're not quite there. If you asked our teams, they'd probably tell you we've got more to do on that. But it is things like common tool chains for our engineers so that they can automate deployments. It's things like approvals for projects within local areas so they don't have to go and ask other people. It's things like aligning teams into value streams. And so we've got a very defined journey model which helps our teams all work together to do what we need to do. And then it's recognising scale. There are advantages to scale, but there's also challenges to scale. And so it's recognising where we will get economies of scale by doing it once and holding firm to that, but also recognising where actually having multiple ways to do things isn't the wrong thing to do. When we think about protect, we think about how do we build into our processes the way that we can get our customers and our colleagues thinking in advance versus protection being an overlay. Every time you say to someone, don't click on that email link, you know, we would have been better off trying not to get them the email link. We would have been better off educating them that they shouldn't be signing up for sessions that, or newsletters that are going to put them on mailing lists, things like that. You know, with our technology staff, it's around how do we build operations in? How do we build the automation? How do we build resilience in? How do we build in the ability to think differently and that focus on site reliability engineering? And with our people, it's about giving them the chance to be curious, to learn, to experiment, to think about what should be different, and then giving them the paths to talk to us about what needs to be different in technology. And we do that through listening sessions, and we do that through feedback sessions directly on topics, but we also do that through regular sessions where we ask them what would make a difference to you doing your role. And so once you've done that, the key thing is metrics. And we all talk a lot about OKRs, we talk about metrics. You get what you measure. If you measure that somebody's going to go faster, they'll go faster. You don't necessarily get better output from them, but they'll go faster. If you measure that you want more frequent deployments, they'll give you more frequent deployments. They might not be valuable frequent deployments. So we think very carefully about what we actually want to measure, and we think very carefully about what behaviour it's going to drive. And so at the moment, one of our focus areas is the percentage of time our engineers spend coding, because we want to reduce the overhead. And so we're very focused on that. And we know that that will drive a behaviour, but recognising that one metric isn't always the right metric is really important. And also recognising that metrics aren't targets to meet. Metrics are there for us to learn and show improvement, to run a cycle where we then turn around and look at how we're going to deliver it, how we're going to think about it, putting in place the processes to do that, and then measuring whether we got there. And so we're very, very firm on the fact that we need to make sure that we cover all aspects of this circle, which is around adapting and adjusting, understanding the metrics, understanding what we're going to learn, coming through, have you got the capabilities, the skills, the resources to do it, and then are we doing our work in the right way? Are we using Agile? Are we using the pieces that we need to underpin that? And one of the key things for us is radical transparency. when we talk to our business areas about what they spend on technology, we spend a lot of time giving them radical transparency about their consumption, their choices, particularly in a world where if you give someone a model to create, they can spend an awful lot of money on compute. And as we get more and more of that happening, as we get more and more of the citizen capabilities to do things, we need to give better transparency, more real-time transparency. And so that's a key foundation for the work that we do. So I've talked about these, I think, on the other slide. So setting the strategy, the guardrails, the principles, governance, and just making sure we've got the right way to know that we're heading in the right direction. So my key takeaways, it's about knowing where you're going. And so when you have a tanker or a cruise ship of 35,000 people, we actually have to know where we're going. We have to know the direction we're taking, and we have to make sure that we're doing the things that are really important to us and we're not just doing stuff. Because it's really easy to do stuff because you can't physically go and talk to 35,000 people. So it's really important to have that focus on direction. We actually encourage all of our people to think long-term, to think about the fact that in 5 years' time, these emerging trends, these things that are going to come and hit us, actually are things that we need to build in the capability to adopt now. We need to think about partnership and doing it with other people, leveraging this FinTech community, leveraging other FinTech communities, learning from others and growing ourselves. And to do that, we actually give our people learning time in the same way you see organisations like Google do that. And we've got a lot of work happening around experimentation and micro-experimentation internally around how we change. It's about prioritising the short term as well. So there are some things you just have to get done, and so you should do them and just finish them. And don't get caught up in making things that you should finish actually take a really long time. Because in big organisations, that's one of the challenges we have. Understanding your opportunities and risks and creating some of those choices that let you go, do I want to do this? And making those choices really visible. We run regular sessions with our exco around what are we going to do? We have more demand than we could ever fulfill in years. So what are we actually going to do? What are those choices? And let's make them conscious. And key to that's listen and adapt and make sure that you don't get stuck on a course or doing something that means that it takes you years to get rid of. The days of 3-year, 4-year-long projects have well and truly gone with the innovation cycles that we're seeing. If you're not getting some value in 3 months, then we need to start questioning the way we're doing the work. That said, unless it's something that is a sequential thing like a data centre upgrade or something like that. But even still, you should get value faster. And the final thing is be commercial. And we encourage all of our people, even our coders and our engineers, to be commercial. Do you really need that new license? Do you really need that new software? Could you think about doing it a different way? Could you do it with less compute? Because being commercial sometimes with compute actually is being environmental. So those conversations about commerciality and sustainability all come together to create the way that we think about technology as a business. But ultimately, it comes back to radical transparency. It's about sharing information so that you can make the key choices and decisions and understanding what people are doing and making sure people can see what we want them to do, but also the things that are going to make a difference to customers. So I'll pause there for questions. I didn't do a dance on the stage, I'm sorry.
There's still time. You've got 5 minutes to fill.
I'm not very good at dancing, actually.
I've got a couple of questions.
Comes from coming from Australia.
You mentioned partnerships there towards the end of your presentation. Can you tell us how you approach strategic partnerships to drive digital innovation and maybe give us some examples of some of the collaborations?
Yeah, so NatWest at a base level runs incubators. I was actually listening to a podcast this morning that was talking about the fact that if you're a small business and you want to work with someone, get coaching, mentorship, NatWest does run incubators that will help that. I think we call them business accelerators. We do a lot of work with partners, so we do it in different ways. So we either do it through innovation sprints where we work with people towards a common goal to just do an experiment to see what's happening. We've been doing some stuff in that space around home climate management, and so those sorts of things, we'll just find a like-minded person and work alongside them. We do acquisitions, so we bought Rooster money, which filled a space for us for youth banking, which is just fabulous. Not only is it about the bank account, it's about the thought process and the design that they very, very carefully put into what is a fabulous app. And, you know, as a personal user, I'll give it a plug. You know, we've done joint ventures with people like Vidino, where we've got Boxed, where we're looking at a bank in a box. So it ranges, and it ranges based on the need we have and the need that others have and the gap that we're looking at filling.
But essentially, partnerships allows you to be more innovative.
It gives us speed, it gives us the ability to try things that we perhaps couldn't do ourselves, but it also gives us choice. And it gives us the ability to try things and to experiment. And so, you know, we're very, very keen on driving innovation and partnerships, not just, you know, with the teams here that we see in the UK, but, you know, we do scan regularly across the world to see what's happening in other locations.
Okay, well, you know where to come. Always looking for partnerships. Jenny Wood, everyone. Great session. Thank you.
Thank you.
Thank you.